All right, welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give a video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, let's get into it this week. So markets here today having a pretty good rally here. S&P is up about 50, 60 points to close out the week. So last week, I said there's still some time on the clock here for bulls, and we are getting that breakout. S&P now at new all-time highs. Here you see the SPX at 48.40 essentially. The previous all-time high was at 48.18 right there with the double top. First week of January, and we finally have gotten through that now. Obviously, the NASDAQ already got through its respective double top a few weeks ago, but the S&P now finally doing that here. We are into a little bit of a period here where it does get interesting. So we just got through OPEX of January, and that is a leap OPEX. So lots of premium expiring, lots of weirdness can go on. I have to say I'm a little surprised. I'm not surprised that we're breaking out. I'm a little surprised that we're breaking out on a Friday where options expire. Typically this type of a day, you're going to get kind of just whipsaw and kind of like a pinning effect here, maybe right to 4,800, a whole round number, and they're actually just squeezing it up today. So definitely a breakout, definitely a little bit unexpected. Again, not unexpected that we did make new all-time highs. Again, I've been saying I do think we need to pierce this at the very least, but so much the timing of it. But in any case, markets are up here and we are continuing higher. At this point, 4,900 is only about 60 points away. And then you've got 160 to 5,000. Markets may want to get to that whole round number. That certainly could be the case. The big news out of the week this week was TSM, so Taiwan Semi reporting, and that stock raised guidance by about 20. I think their guidance for revenue by about 20%. So that stock got a huge a lift. Another stock that raised guidance here is SMCI. This stock has had a ridiculous run. Even it puts Nvidia's run to shame here. This was like a single digit equity not that long ago. You go back to 2021, in the $30 range, and it's at 400 right now. So again, AI, mega cap tech are driving this move higher. You can see Nvidia here closing in on the 600 handle. Broadcom at new all-time highs. AMD upgraded, not making this up, was upgraded 3 times this week. Is this getting a little blow off-ish? It's starting to feel that way. When you see ridiculous upgrades when stocks are already at new highs, it's generally can be a warning sign. That does not mean the market can't go higher. In fact, a lot of the gains, a lot of the most biggest gains come when the market puts in a blow off. And I've been kind of like looking for this here. Can we get can they finally flush the bears out, right? We've kind of had this narrative here where, over the last couple of weeks, a lot of people are getting bearish here. We pulled back the first week of January. I said, don't get too bearish yet. I think we need to make that new all-time high. And, we're doing that now. Again, doesn't mean we can't float higher. You could get FOMO to start coming in. If you start to get bears to flip, this can go higher here. So be aware of that. But right now, definitely be cautious. I definitely would not be chasing up here. If you have winners, let them run, and that's how you trade this type of environment. But again, markets new all-time highs, and it's been a little bit of a time coming. We tried to get there in late last year, couldn't get there. We pulled back the first week, chopped around, and now we're there. So markets are at new highs here. If we could take a look at the triple Qs, had this little trend line here I showed you guys last week. We did kind of get through that. So next level I would say is 425. I did a little calculation on this. Again, it's not a major level, just a psychological level. That's just a near-term level to look at for the Qs, and after that I'd probably say like 450. But that's quite a bit of a ways away at this current time. But again, the Qs, again, big tech here, up 1.75% here on Friday. And again, it's all big tech related. If we take a look at the Russell 2000, it's getting a bid the last 2 days, but still well off the highs here. Now, granted, this was up a lot more than everything else. I think it was up like 25% in about 8 weeks. So pulling back here is not, unusual, but again, breadth is not really the best. Advanced decline's not really the best. But again, you got to respect the market while it's doing this. And again, markets are acting well. So anyways, Russell 2000 did pull back into the 50. You're getting a bounce here. Short term, 193.50 and then 197.50 are the levels. Then you've got 200 and 205 above those areas. Diamond here making new highs. So we talked about that as well. It does feel top heavy. Again, that doesn't mean you can't have a last gasp type blow off move here. But again, this is still getting extended. You're 3-4 weeks here of consolidation is not really, in my opinion, not enough to work off this overbought condition. You're still very extended from that 20-week moving average. If we go back, to a few years back, this is really the only time we were this extended, and that was in the COVID lows, right? So take a look here. You can just draw a line down and copy that, and you can see when we're getting this extended here, you have to start pulling back. So anyways, diamond here, it's holding up for now. We'll leave it at that. This can still go higher. All right, SMH, that's obviously been the star of the week there. New all-time highs there, up 3.5% here today on Friday. That is continuing to push up. I gave you guys that 4,300 level on the stocks. That did get hit, and we are through that. I have not really had a chance to do a calculation on this, but I'll just say 4,500 is your next kind of whole round number that we could look at for the SOX. But semiconductors have been the leader, and again, when semiconductors are acting well, it's never a good idea to fight the market, so just keep that in mind. IGV here, continuing to rally, so that finally got above 410, and we talked about this too. Was this whole just this move here? You could argue that 1, 2, 3, 4, 5, 6 weeks of consolidation. You could argue that that's bullish consolidation. I just would have liked it to not have that higher high there, just kind of sloppy pattern wise. But I guess it's done enough here to get through that, and there it is. So above 410, 411. Next area is right around 430, then 440, and then obviously double top there for the IGV. Cloud software remains a strong sector. Dow Transports here again tested the 50 moving average this week and then got a bid. I've been telling you guys 15.2. It's good support, and that got tested on Wednesday. And we are now off of that. Still have a little bit of work to do. Still got to get through this red bar high. So at 15.7, you get a close above that. The transports definitely can move higher here. But again, that pattern never broke down. I know a lot of people thought it did, but there's still a ton of support here at 15.2, and it is holding for now. So again, respect the DJT. All right, so let's get over here to interest rates. So if we flip over here to the 2 year, so rates acting well again. Sorry to get these intraday charts. There we go. So rates continuing to act well. We did hit the 4.15 area. We've been talking about that area, 4.1, 4.15, and the 2 year has bid up off of that. And we're actually above this breakdown bar now. So next area on the 2 years, we're going to say 4.5 and then 4.6. So yield curve starting to unwind a little bit, but now starting to pull back in here. So again, it's not an easy, it doesn't go up there in a straight line. So yields acting well. 5 year here into this micro double top, 50 moving average there. Same thing with the 10 year, right? A pierce of the 50 moving average, pierce of this red bar high, and it is pulling back. I think yields could pull back here a little bit, but after that, I do think they have another leg up. That could be problematic for the market. Again, the market doesn't care right now. It's in euphoria mode, but I'm telling you, if yields really start to push up again, that's something the market's not going to be able to ignore. I think a lot of this bullishness right now has to do with the January OPEX. But again, that remains to be seen. We'll see how the market trades into next week. But again, yields acting well here this week, and you see the 30-year pulling back. Again, we talked about this area, 4.3. That's where you're getting a little red downtick. Again, nothing more than that. I don't expect this to do anything more than cook in the oven a little bit longer. And I think rates get to 4.6 and 4.75 potentially on the 30-year before it's all said and done in Q1. Home builders here via the XHB are still acting well, as you can imagine. So up 87 basis points here on Friday. There's nothing wrong with this. The only problem with the XHB right now is, again, like a lot of things, it's still extended from the weekly 20 MA. It just needs to either go sideways or pull back into that, and then I can go higher. But right now it's holding up okay. I don't really have much else to say. This is just a consolidation pattern. If it tries to break out, I think it'll be short-lived, much like the Dow, right? I'm not saying it can't go higher, but I think that if it does try to break here, I don't think it's going to last all that long, just given how extended we are on the bigger time frames. Anyways, VNQ here, so real estate holding the 50 MA. Again, kind of looks like the Russell. We talked about this area. This would be short-term support around 84, green bar low, consolidation pattern, 50 MA, good bid there, and it's it's doing what it should, right? It's holding the 50 moving average. It should get a bounce there. Short term, we'll just say $88, right? We'll just extend this trend line. How about that? There we go. Extend that across. We'll just say around $88 is kind of your short-term level. If it doesn't reject at the 20 MA. If it rejects at the 20 MA, then it's a little bit on the weaker side. But, right now it's holding that area and it's doing what it should. XLF here also getting a good outside move up 1.5% today. So again, that may still want to get to 38 and a quarter. We have consolidated a little bit though. So we have put in weekly consolidation. So we may upgrade that target moving forward. Your next area, you've got a big wide range red bar here on the weekly around 39, 39.50. So that would be your next big area if it gets through that. But I do think it could at least get to 38 and a quarter, maybe 38.50. Here over the next week. Pretty good candle. Again, still looks a little exhausted here. Maybe a little bit of distribution coming into play. Doesn't mean it can't go higher. It takes a while for markets to actually complete distribution patterns. And oftentimes they're done in waves. But in any case, XLF holding up here and still acting well. KRE holding that level. We talked about 48 and it got a bid off that. Again, there's your 50 MA, green bar, 48 handle, and it got a bid there. So that can still go a little bit higher. Same thing with the KBE. And broker dealers here. Again, nice pullback there, and it is getting an outside bid here on Friday. I still think this wants to go test 520 at some point. It just had a very big run, and it's parabolic. It's pulling back off of that, but again, it's holding up right now, so we'll leave it there. All right, over to oil here and commodities. So starting off with crude first. Crude just is so tricky right now. So take a look at this big wedge, right down, lower highs, higher lows. We hit the down the lower band here on Wednesday. By all intents and purposes, this is a breakout. I mean, you can see clearly, but there's no follow through right now. I don't trust oil till it's above 75. That's kind of what I'm going to go with right now. Outside of that, I think that maybe you have some more backing and filling to do, but I think this is my guess right now. Is I think yields. We just talked about the 10-year. I do think it does pull back a little bit more after this little pop we've got. And I think you start to make another leg up. If crude's still holding up, I think that's when it can get through 75. And then you'll go to 78 and then $80. So that's kind of my guess right now. If it rolls over, well, you got 67 and then, down to 64. Those would be your levels there. But again, I'm still very neutral on crude. I'm not doing anything with it at the moment here. XLE is trying to hold that 79 area. So we talked about the upper 70s there. This could still go a little bit lower, but you do have a tail candle to trade off of, so that could get a bounce there. Near-term resistance is 82 and then 83 and a quarter. XOP also 2 tail candles in a row. Again, could get a bounce here up to 132.50, maybe 135. And the OIH, which I do own a little bit of, didn't quite get as low as I wanted to, but I did get a position in this. This one I like very much. It's not so much on the daily, although this is daily support. I've been telling you guys about this level for probably 4 months now, and maybe that's why it didn't get as low as it wanted to. But in any case, this is more about the monthly, and I just really like what it's doing here. So you got a big wide range monthly green bar, pull back inside of that. You're testing the low. If this starts to break up, and break to new highs, this is going to 4 and then 450 and then 500. So I do like the OIH. Now, I won't hold it the entire way. I'll probably trade in and out of it. But that's kind of what the bigger macro pattern suggests here. So I don't see a ton of downside left for OIH. Could it come down one more time? It certainly could. If it did, I would be a buyer. But I do like oil services in this area. Uranium here continuing to pull back. So we had the kind of parabolic move, and that was down, CCJ down every day this week. So 1, 2, 3, 4. It's nothing terrible, though. We just had a big move, and you can make a case that this is a pause week right here. So again, 20 MA caught up to price, and we pulled back into it, and it got a big bid. Same thing with the URNM. I've liked this very much so. I've been very public about that. Very good, very strong weekly pattern, 20 MA catching up to price, and then you see how that acts as fuel for that to push higher. So that is a textbook pattern there. URNM backing off a little bit this week, but there's no problems. It was just up 20% in like 5 days. So it can have a little pause here. Again, you get the daily moving averages to catch up. There's nothing to say it doesn't go higher. Nat gas continuing to pull back here. Again, that's into the 250, 260 area. So this is kind of where it based before it broke out. So I would expect some type of a bounce here in this area. But outside of that, it is coming back in and retesting this breakout area. I don't really have a good read on it. All I will say, there is a ton of backwardation into the next month due to that polar freeze that we had. So this chart's going to get really skewed in a week and a half, I think. So I'll probably start using an adjusted chart next week or so. If that, I think it rolls over on the 29th. So we'll have to look at that. So not next week, but the week after. This chart's it's gonna gap down to like 220 or 230. That doesn't mean that the price actually is going to lose that much. It's just those contracts have that much of a gap in between them. But anyway, all right, let's get over the dollar index. So dollar's still holding up well, despite all this. And again, the market is just ignoring everything right now. Dollar is, moved up, 3 points essentially off the lows. And we talked about yields. Yields have moved up from 380 to 420 on the 10-year in the last 2 weeks, in the same amount of time, last 2-3 weeks. And the market's making new all-time highs. So, we'll see how much longer this can go on for. But dollar holding up. Right now, you went into the 200 moving average, and it's stalling out. If this can consolidate sideways, it'll go to 104, 104.35. I do expect those levels to get hit. So I am kind of short-term, immediate short-term, I think the dollar just backs off. But medium-term, I think this pushes up into that 104 handle and tests that area before too long. All right, so on to precious metals here, starting with gold. Again, up 50 basis points today. Again, it's nothing great, nothing terrible. Dollar's down a little bit, and it's holding up as well, holding the 50 moving average. I think if this comes down here, it's going to 1975, then 1950. Those levels should kind of coincide with the levels I just gave you on the dollar. Silver here, I still think this needs to go test 22, maybe 21 and a quarter. I just don't like that it's not holding that green bar there. On a closing basis, you closed below it the other day, and it looks like we're going to close below it again today. So I do think this does need to test lower prices, but I think that silver is something you want to be accumulating this year. Platinum here, that got a bounce this week. It came up off the lows yesterday, a little pause today. We'll see if that can get some follow through next week. I think that can, your next big level's around 950, 960. If you can get through that, then 990 and 1,000. So platinum here coming up off the lows there. Again, these other precious metals, palladium too, very thin. You're going to see this did slice double bottom. It's holding it on the weekly close, which is important. But in any case, they do come down here. They go up quickly, and they can come down quickly and overshoot as well. I mean, we had a level right here. We blew through that. We had a level right here. We blew through that. And then on the downside, it's like it just disrespects it as well. These metals are a little thinner, so sometimes they overshoot. But again, palladium holding that double bottom there. And I still like both platinum and palladium at these prices. Copper here getting a little bit of a bid here on Friday, so holding the 370 handle, or I should say 370, 375. It's getting a bounce. Let's not make anything more out of it than that. If this comes down, it'll be down to 360, 365. On the upside, I'm just going to say 385 and 390 right now are your levels there. All right, so Bitcoin here, we finally have a little bit of technicals to talk about, other than me just repeating myself over and over. So we definitely had to sell the news last week. Outside move, we took out the green bar, and you can see on the daily chart, go back to September, you cannot find a lower low on the chart going back to September, right? Everything's a higher low, everything's a higher high until right here. So we had a low, another low, higher low, barely, and then we took that out. So we now have chart damage on the daily. Again, this does not mean it's breaking down and going to zero. It just means you've done chart damage for the first time in months, right? So that could indicate that this is ready for a correction. If we go over to the weekly, you do have a pretty good outside candle. So get that volume fixed there. We have a pretty good outside candle there after touching this big level. Again, we talked about this level for a long time. We got hit, and we came back in. Here's the thing with Bitcoin. On the weekly, this is still okay, believe it or not. So again, I keep talking about this dynamic, but it matters. If this 20 moving average just catches up to price and price just goes sideways, this can go higher. So just be aware of that. If it starts to come back down and, can't hold that 20 MA and you close below 40,000 on a weekly close, right below this green, then I think Bitcoin could be vulnerable down to 30, maybe 32.5. So that's the dynamic right now. Got to use those bigger time frames to tell you a lot more, but we do have technical damage on the daily. And you got daily chart support around 38, 39,000 right now. All right. So anyway, so next week, just be careful here. Markets are getting, I wouldn't say stretched. Certain things are getting stretched. I think big tech is very stretched. I think semiconductors are very stretched. I think the rest of the market is okay. I think if we are going to push up into 4,900, 5,000, something of that nature, by February, it's likely going to have to come from some other sectors. You're going to need to see maybe small caps, possibly even energy or other beat up sectors kind of take leadership here, as opposed to big tech. But right now, markets are acting well. Don't fight the trend until the market gives you the signal. Yes, we're getting euphoric, but euphoria can last. And often the biggest gains are made in the euphoria phase. So don't try to fight this just yet. Again, if you own winners, ride them and let it go higher and trail your stop loss. But right now, market's acting well. We have new all-time highs here, and we'll see what the market brings going into next week. Anyways, guys, going to wrap up here. You guys take care. Come find Jason on Patreon. Come find me on conovertrades.com. I'll talk to you guys all next week.